Another opportunity to do business. It takes us 55 minutes around the world of business here on Business Incorporated. And here's what we have prepared for you. Senegal has raised $644 million in local currency bond sale. Financial institutions in Kenya have to sit up as they crack down on unlicensed services. And Ghana is looking to hedge gold price to preserve buildup. Welcome to the program. I'm Ini John Mekwa. We start as usual from the global space where oil prices rose on Wednesday on expectations of steady demand in the United States and China, two of the world's largest oil users, amid an improving economic outlook. So we see for the numbers, Brent for this afternoon is in the green, 0.42%, almost 0.5% is what we have, $69 on the dot. Lost some dollars from about 70 that we saw. WTI is also up 0.6%, brought it to $66.92 a barrel. And looking at the details of it, prices have seesawed in a fairly tight range, as signs of steady demand from an increase in travel during the Northern Hemisphere summer has completed, with concerns on U.S. tariffs, trading partners, and that it will slow economic growth and fuel consumption. However, major oil producers are pointing to improvements in economic growth for the second half of the year. The Chinese data showed growth there remained consistent. We're still staying in the oil and gas space. Average daily crude production for Nigeria went up above the quota allocated by the Organization of Petroleum Exporting Country for the second time this year. According to a report by the Nigerian Upstream Petroleum Regulatory Commission, that's the NUPRC, the country's average daily crude production was at 1.5 million barrels within the month, representing about 100% of the OPEC quota. The NUPRC report also highlights that oil production, including crude and condensate, was approximately 1.7 million barrels per day, which is an improvement in crude production when compared to the previous month. However, the output was still below the target of over 2 million barrels per day, which is what is in the budget, the 2025 budget for Nigeria. Leaving the oil space, gold prices rose on Wednesday as investors digest data showing an increase in the U.S. consumer prices last month and wait for further clarity on U.S. President Donald Trump's trade policies. So look at the numbers. It's mostly green at this time. 0.4% for spot gold at $3,334.12. U.S. gold is up slightly, 0.1%, $3,340.90. Spot silver is also up 0.3% at $37.82. Platinum is up 0.2%, $1,379.46 per ounce. Palladium is up 0.4%, bringing it up to $1,210.66 per ounce. Trump has threatened to impose a 30% tariff on imports from Mexico and the European Union starting from August 1. However, Trump further said that it was open to further negotiations. Well, U.S. consumer prices increased in June by most in 5 months, and higher costs for some goods, suggesting that tariffs were perhaps starting to have an impact on inflation and potentially keeping the Federal Reserve on the sidelines until September. That is not what President Trump, of course, would like to hear. But following the data, Trump said that consumer prices were low and Fed should bring down interest rates now. And we'll see what Jerome Powell will do about that in the next meeting. Well, back to Nigeria, where insurance sector recorded 27.3% growth in total assets year on year to 4.2 trillion naira in the first quarter of this year. That's against 3.3 trillion naira recorded the same period last year. According to the first quarter report of the sector released by the National Insurance Commission, the non-life insurance business recorded 2.7 trillion naira in assets, while the life insurance business recorded 1.4 trillion naira Further breakdown of the report shows that total gross premium written increased by 63.4% to 769.2 billion naira in the first quarter of 2025 from 470.7 billion naira recorded in the corresponding period last year. And that's the highest ever premium generation in the first quarter period of any year. NICA mentions that insurance industry outlook is better interpreted as positive against the backdrop of ongoing regulatory initiatives, including sector-wide digitalization and risk-based supervision, among other measures. Global goods trade picked up pace in the first quarter of this year as importers rushed to stockpile goods ahead of expected tariff increases. And this, according to the latest report from the World Trade Organization. Its readings from the WTO Goods Trade Barometer rose 103.5, and that's up from 102.8 in March, indicating that merchandise trade volumes remained above recent trends. According to 166 member country organization, that's the WTO, the recent surge in trade was driven mainly by increased shipping and air freight activity. However, the trade body is warning that the momentum might not last, pointing to a drop in new export orders, which could signal weaker trade growth in the coming months. Now, Nigeria's Statistician General Prince Adeyemi Adeniran has come under scrutiny over the drop in Nigeria's unemployment data. Defending the figures, Prince Adeniran emphasized that the drop was primarily driven by an updated methodology aligned with International Labour Organization standards, most notably the recalibration of the employment threshold and broader survey criteria. He made a comment at the media parley in Lagos.
2014, the cutoff hours for somebody to be classified as employed is 40 hours because as at that time, government is the sole employer of labor. No much company, no much self-employed taking place. So people believe if you work 8 to 4 and then you work for 5 days in a week, you are going to get your 40 hours. But as time goes on, we discover that there are people that are working less than 40 hours a week, and it's growing from time to time. When the upsurge of teachers in nursery school came up, it wasn't before. Nursery school had not that many. You start right from primary school and go on. But when we have nursery schools, kindergarten school coming up, we have teachers that are working between 8 and 12 because they are small children. They cannot stay long hours. So in a week, the number of hours they put in is not up to 40 hours. But we are classifying all of them as unemployed because we have pegged the number of hours at 40 hours. So that was what led to us changing that methodology in 2014 to say that if you work 20 hours and above, you will be classified as employed. If you work 1 to 19 hours, you will say you are unemployed. But with time, we still discover that many people are working 5 hours, 8 hours, 10 hours in a week.
Yes, we know how much controversy has come out of that unemployment data gathering methodology, which was recently adopted, and there the Statistician General is explaining, I guess one of the things he was saying is the informal sector has now been captured, and with the informal sector, the hours may not be as calculated as it used to be with the civil servants or civil service. But I hope one of these days we can have more explanation from the NBS to help Nigerians understand the data and the methodology that has now been adopted. Another burning issue is the issue of electricity supply and distribution, even generation in Nigeria, and we've stayed on this quite a bit from last week. So let's still stay on it today. And now we're having this conversation with the coordinating head of corporate services at Ibadan Electricity Distribution Company, Ms. Angela Olanrewaju, joins us virtually from Ibadan. Ms. Olanrewaju, good afternoon and welcome to the program.
Thank you very much.
So it's good to have you on the program, especially discussing the issue of electricity. But help us to understand from a distributor's point of view, have we gotten better? I know that the NERCSO have come out to beat their chests and boast that we haven't had any grid collapse this year, 2025. But from your perspective as a DISCO, has the situation of electricity generation, supply, distribution, has it improved?
Oh yes, definitely it's improved, and I think that we're on the right path in the sector. We haven't had so much grid collapses, which has been a major issue that we normally have within the electricity value chain. So electricity has improved. We're not where we ought to be yet, but definitely we have improved. We have made some major landmark improvements.
But when we say it has improved, are there some steps that have been taken to lead to that improvement, or is it just coincidence? Because we may as well be holding our hearts in our hands that we could have a collapse anytime if nothing has been done.
No, lots of things have been done. Lots of things have been done. One of the major things that have improved that is that there's been a lot of investment right from generation. The government has been very committed. The Minister of Power has been very passionate about this sector. There have been a lot of MOUs and a lot of transactions that have happened to strengthen the net, starting from generation, right up to TTN and even to the distributors. TTN has been witnessing a major, realignment and re-engineering. There's been a lot of investment on infrastructure. So it is not coincidental at all. You don't get improvements in the electricity sector by just holding your heart, like you said, but it's by intentional and deliberate and structured interventions. And that's what the government has been doing and it's been following through. One of the major interventions that has helped this improvement, the hours of supply, which is what led to the band A, which has stipulated that the distribution company, you must give certain hours of supply to your customers. So it's not been accidental or coincidental at all. There have been very intentional interventions from the federal government, from our regulators, and then also from the players within the value chain.
And when you say there's been investment and all of that, there's also the thought that the new law, the law that empowers states to generate, distribute, and all of that. For instance, in the state where you are, is that active? Has that contributed, or is yet to start?
So, well, the electricity reform starts, which is also empowering states to have regulatory oversight. That's part of the deliberate interventions. Your state, for example, where IBDC is established our headquarters, yes, this has already started. While it has not fully taken off, what it has done to us as players, industries that just put us on our toes because we realize it's not business as usual. So we're strengthening infrastructure, we're building capacity, we're focusing on customer care delivery because those are the places where we can make a differentiation. The reform what it's doing is that it's opening up the landscape. So it's not a monopoly, so to speak. We have to be on our best game to be competitive and to remain relevant. We're doing a lot of stakeholder management. Even with the government, we are working with them. Your state, for example, we're working with them. We already have a working committee made up of all the stakeholders, and they meet regularly to ensure that oversight and the reforms work. So those are part of the things that have also helped in improvement we're seeing in the industry. So everybody sort of knows that it's not business as usual.
But help us to understand how this could work, the issue of states getting really involved. Do you still need the DISCO in there, or is it just other private sector? How could it work? Could you help us understand the picture?
So how it would work is that right now, the sector is opened up. So other players can come in. So you can have other generators, you can have other distribution companies. So IBDC now is going to be having competition within that sector. Right now, within our franchise area, we are the major distributor. We don't have that apart from the other generators, and power providers that we are already working with. But this means that that sector is open. You can have other companies coming in to generate the electricity. They can also have their distribution to customers. They can work with us. They can go straight. So our customers are getting a lot of options. Basically, that's what it means. And then the government, the state governments have more control. They are involved in this process. It becomes a way for them to also deliver on their electoral promises to their constituents, to the people. So customer service is going to be key. There's no hiding place literally for any disco. So for IBDC, we're making sure that we're doing a lot of network improvements. We're strategizing internally in terms of our network, which is key for us to be able to deliver that kind of supply that our customers want, quality and quantity. We are working on our network infrastructure.
So another thing of interest is the issue of metering. Now we have maps, and we've heard the federal government has rolled out some policies, to try to get meters to the people, which is supposed to accelerate power distribution. But recently, I met some individuals who said that their meters are expired, and then they've tried to replace them, and they were told meters are not available. Could you explain how a meter expires?
So a meter too has a life expectancy. So meters can become, for example, we have analog meters. We have meters that are 40 years old, much older than that. After 10 years, the life expectancy of the meter is compromised. So meters do expire like every other thing. But what's happening is that's part of the intervention that I talked about earlier, that the federal government at different levels has been very intentional about these interventions. Metering remains one of the strongest, biggest challenges within the sector. At IBDC, we are totally committed, because when the customer is metered, they have the power in their hands. They can control their consumption. You remove totally that, painful fact of estimated billing, which, customers are very, very unhappy about and uncomfortable. So metering gives the customers power. So what's happening with metering is that there have been different interventions. There's one, for example, that is being supported by World Bank, this REP. That's the Distribution Sector Recovery Program being supported by World Bank, which is bringing, millions of meters into the country. Then we also have MAP, which is Meter Asset Fund. This is coming from the federal government directly and is being supervised by regulators, NEC. So that's how meters are coming in. Then we have MAP, Meter Asset Provider Scheme. This is something that has been around for almost 4 years now. But the new thing is that MAP has been sort of re-engineered. Hitherto, we used to have specific maps that the customers didn't have a choice. These are the map vendors you can work with. But now it's been liberalized. I want to use the word liberalized. So the customer has the right to pick any map of their choosing. And then the map supplies the meter. So those are the 3 or 4 major ways through which metering, and then we also have our own metering scheme, that we use to meter, especially where we have a lot of metering gap of rural areas, of vulnerable customers. Our metering target annually is about, to get not less than 240,000 customers metered annually by our own direct scheme. And then, of course, this is definitely increased by the interventions we talked about. So metering remains a key factor to help stabilize the electricity industry. And we strongly urge our customers and we encourage them to get metered. And this process has become seamless, I must tell you the truth. Yes, like every process does have its hiccups sometimes, but I can tell you that at IBDC, we have a very seamless process. You have to apply online in our platform, msibdc.com. Once you start the process, after completing all the process, 10 working days after that, you get metered. But this is barring some challenges that may happen, because sometimes customers may not really fully understand the process. So that's where you have some extension or
looks like there's a glitch there. I hope we can get Mr. Lariwaju back. She was just telling us how in IBEDC it's seamless, but I mean the same cannot be said for Ikeja Disco. I can say that I've met a lot of people who currently do not have meters, and they have applied and tried to reach out, and they have not been able to get them. I mean, I think they've even been told, having gone to their office at Ikeja, that there's no meter available. And last week we had a meter manufacturer on our program here telling us that they have produced meters and they have meters just lying fallow there. So where is the problem? Where is the connection, I wonder? Hi, Mr. Lariwaja, are you back?
Yes, I am.
Okay, all right, we lost you for a bit. Do you want to pick up your thoughts, or you want me to ask you a question?
Can you just repeat the question?
Okay, so you were talking about, the ease of accessing meters.
Yes. So I'll think that the metering process at IBDC has become relatively seamless. I mean, we automated the process, so it's actually applying online for customers, by our website, msms.ibdc.com. That's how the process starts. And then, of course, it has different processes, from technical verification, and then finally to where you can pay. And anytime where there are challenges within this, this process, it's because maybe some, part of it has been circumvented, or there's some requirements that they've been able to fill. So for existing customers, the process is relatively seamless. For new customers, for example, who go on that process, that's one of the places where we have challenges, because as a new customer, there are other processes that need to happen for you to be connected to us, and then you get metered. And it's even the NEC mandatory now for it to be metered. So the process is relatively seamless, and we're working more to make sure that it becomes even more easy and accessible for our customers.
Well, I mean, I'm happy you said that. Even though I don't have a transaction with you, because I was just, when we lost you for a bit, I was saying how I've met some people who've gone to Ikeja Disco, and they are ready to pay for the meters, but they are told there are no meters. And yet we had a manufacturer, meter manufacturer on our program, and he told us, well, they have produced meters that have been approved, but it does seem there's a gap between that production and getting it to the consumers. But I'd like for you to educate us a little bit more about this expiration of meters, because it does seem like a lot of consumers are not aware that their meters can expire. How long does it take? Where does the burden lie, for expired meter? If I buy my meter today, do I know when it was manufactured? Is there a date that shows the expiration so that I can prepare myself, for that period?
So, actually, after 10 years, a meter is no longer regarded as fully functional. I mean, the quality has compromised, and we wouldn't put that burden on the customer. That's our job at Disco. We have technical people that handle that. We advise that the customer should never tamper with their meters, because that's where energy theft happens. And if you get an electrician in a park to touch your meter, that meter is compromised. And the electricity laws right now around energy theft and issues like that is very stringent. So we advise customers not to touch those meters. It's not the place of the customer to know, that my meter is expired. That's our job. Our technical guys, they move around. And when we have customer engagements, we educate the customers on things like this. If your meter, for example, is not functioning normally, you are supposed to let us know through our different customer care platforms. Tell us, and we'll send our technician to look at those meters. But right now, there's also some metering issues that is a special set where we have meters that are analog meters. And right now we're going on digital meters. The digital meters, are easier for us to monitor, are more efficient, because, as you know, very few analog things are happening. So it's actually basically the way you buy a mobile phone. After some time, you can see that mobile phone, the functionality is reducing. It is something is happening. So that tells you that, okay, it's about to change. So with technology and all that, Internet of Things and all that, those are the things that we're using to ensure. At our back end here, we have our AMI, infrastructure, which is giving us the report of this meter at the back end. So we know whether the meter has been compromised or it is gradually losing its functionality. And we have a special plan for such meters. That's part of what we cater to for our meter rollout. We will replace those meters, especially for customers in the starting band, customers in the in the rural areas where we know that they may not have the capacity to be able to change the meters of our call meters. We have meters that we call non-SCS meters. Okay, that's our industry lingo. And these are meters that you need to actually have a card, a physical card, to be able to buy energy. Is very inconvenient where we're talking about digitalization. The economy or the industry has gone very is highly automated. We don't want customers to come to our office with a physical card to buy. What we want is that you can sit in the convenience of your sitting room, your home, your office, anywhere to burn with energy, to burn for energy. So this kind of meters are priority for us to replace. And within banks like Band A customers, we encourage them, even before we get to you, please replace those meters so that it helps you to manage your consumption and you're sure of the integrity of your consumption and your supply.
All right. Just before we let you go, I would like to ask if, on the other side, the attitude of consumers towards bill payment, has that improved too? Because I know that has been a major part of a hurdle that you have to face as this goes.
So I would love to say that has improved significantly, but I also think that the economic challenges also making it a bit difficult. Yes, it has improved. There are still parts of our franchise where customers believe that electricity is a social service and they don't have to pay for it. There's energy theft where meters that are compromised, they are tampered with, there are customers that are using energy, they are not paying for it. But on the average, we also have customers that are very, supportive of the digital. They understand the macroeconomic issues that are going on, and they realize that we need this revenue to move the business forward. The Disco is the sort of collection agent for the whole value chain right now. So when we collect this money, when we get this revenue, the immediate revenue, that's how the generation companies can keep in business. That's how they can pay for gas and all that. That's how TCN can provide the infrastructure required, and that's how we too, at the distribution aid by the electricity distribution company, that's how we can pay our bills. That's how we can provide better service to our customers. So our appeal really is that customers should help us to provide better service, better quality service energy regularly. Don't engage in energy theft, don't tamper with electrical infrastructure, protect the infrastructure within your neighborhood. We also have a lot of cases of vandalism. And every time infrastructure is vandalized, it means that the critical resources that will go to improving power supply, we need to use it to replace these materials that are vandalized. So we appeal to our customers to work with us, to collaborate with us more, and to understand that the electricity sector in Nigeria is a work in progress. We see them as critical stakeholders. Without them, we won't be here. So our appeal is that they keep supporting us and that we are committed to doing better.
All right, a commitment and appeal there from the coordinating head corporate services at Ibadan Electricity Distribution Company, Ms. Angela Olanrewaju. Thank you so much for your time.
Thank you very much, Nini. Grateful for the opportunity.
All right. Now let's take a break. When we come back ahead, the Nigerian stock market is on fire. You want to catch a piece of it, Anita has the gist. After the break, please stay with us. Welcome back to Business Incorporated here on Channels Television, and we head to the markets now with Anita Edits.
Good afternoon, Nini, and welcome back from that holiday, although we were on duty.
Yeah.
Yes, of course. The financial market was on holiday. And of course, I heard you mention something about the stock market being on fire. Yes, the continent's best performing stock market is still on fire. And it's not a consuming fire, it's actually a glowing fire.
Nice one.
Exactly. And that's picking up from what we ended the Monday's trading session. So picking up from the 126. Okay, so let's take a look at it on the board. For investors and viewers across the world watching, those who have their money in the stock market, is currently officially the best performing stock market on the continent, on the African continent, and poised to be one of the best performing stock markets, which has kept up that tempo, that status within the last couple of years, almost about 5 years now. So 126,000 was what the market was as at Monday, and gained more than 340 billion naira, and bringing the year-to-date gain to about 23.09%, and month-to-date at 5.6%. But lo and behold, that 126 is gone. As at intraday over an hour ago, what we saw the market printing was more than 1%, and lifting it straight up into the 128,000 points, 128,188.69 index level, and that's another record-breaking high, all achieved within the first few weeks of July. Today is the 16th, the month has been halved, and also the year has also been halved. But so far, 23.09%, this is added to, so the market is actually more than about almost 25% year-to-date gain, and so far the likes of the industrial goods, the banking counter, as well as the consumer goods counter are all contributing to the market's continuous gain. And of course, we're poised to see by 2:30, close of trading on the Nigerian stock exchange, that the market would sustain this tempo and even higher. Our projection right here is that the market would end the year, maybe even before the end of the year, the all-share index could cross into the 150,000 level, and that's because lots of investors from the PFAs, domestic investors, are putting their money where the mouth is, particularly on the stock market. So this is for Nigerian stock market. For the Johannesburg Stock Exchange all-share index at intraday, it was down 0.12%. And of course dropped from the 97,000 points which we saw it previously. That was just before the market went on holidays in Nigeria here, which we couldn't track yesterday because of the public holiday here. But the market at intraday lost that level, has dropped to about 96,000, but not doing pretty bad there, as you can see on the board. Now, so let's take a look at the EGX30 and the Nairobi Stock Exchange all-share index, both in the red. Speaking of Egyptian Stock Exchange, we have it that the country has already, the IMF has given some impressive reports. The IMF says Egypt has made progress in its reform, and that's citing the state's dominance of economy. They made progress on the structural reforms under an $8 billion IMF fund loan agreement, which has been mixed, but the market is not really reacting positively to that news. And for the Nairobi Stock Exchange all-share index, the impacts of profit-taking has dented the market's closing figure as at the close of Tuesday's trading session. So the market will be open for trading later today, and we expect that the market would pick up the bones and go into the green territory in midweek trading session. So that's a wrap on the domestic and the other African stock markets at intraday and for the close of Tuesday for Nairobi Stock Exchange all-share index in Kenya. Now, let's talk about the financial market, and this time we're talking about the fixed income as well as the Forex market. For the fixed income, we saw that it was a bearish close for Monday, and then a bullish for Monday, and then the market currently is in session. And then we also had it that the central bank had posted on their website that the closing exchange rate of the naira against the dollar was 1,518 naira 89 kobo. So now we'll ask our analysts today, who will be giving us details about that, as well as other developments, both within and outside Nigeria, how the markets and investors are reacting at the moment. And we have Akpanwa Oputu, Chief Dealer with Lotus Bank, to give us highlights, details, and what to expect within the market. Thank you for joining us, Akpanwa.
Thank you for having me on the program today. Okay.
So now, I just mentioned about the central bank posting that closing exchange rate of about 1,580 naira 89 kobo against the dollar. And of course, the naira has been trying to make a comeback both on the parallel market and the official market. So how has the market reacted to these current levels as we speak?
Okay, so the rate 1,518.89 naira to the dollar was what we saw on the CBN official website on Monday. So how market has reacted to this? market has been relatively stable. So this is the strongest that we have seen that the Naira appreciated since March 14th of 2025. So what this is signaling is a wave of positive momentum in the currency. So market actually projects that the Naira will be stable around this rate. It's going to trade between 15 levels to 15.35 Naira to the dollar this week. So we've seen improved FX liquidity in the market. We've seen the CBN come into the market to intervene. On Monday and on Friday, they sold a total of about $180 million, and that's actually giving stability to the market. So from the OMO auctions that were conducted last week, we've seen FPIs bring in these inflows, and from these inflows, the central bank is able to intervene in the market, and that's actually provided stability in the FX rate. However, we continue to see this rate trade around the 15.20 to 15.30 Naira to the dollar level. So we expect that as much as the CBN continues to intervene in the market and FX gains traction, we'll see these rates trend lower.
Okay, so now with that being said, what is the level of confidence of foreign investors within that market space for Nigeria's economy overall?
So we're at 1518 to the Naira. It shows that the foreign investors are actually confident on the market, the stability and the transparency in the market, because there's less volatility right now in the market. So when you had the opportunity to go into the market to buy funds, you can actually purchase funds at this level. The market has willing buyers, willing sellers at these low levels, and it's actually very encouraging coming from where we were on the Naira last year, trading above 1,600 Naira to the dollar. This is actually a win for the central bank. It's been good development. As we continue to see steady oil export revenues coming to the country, we'll continue to see the rates trend lower. We expect that we'll one day get to 1,500 Naira to the dollar, which is where the budgets for 2025 was actually built at.
Okay, so now let's go straight to where your market forte, which is the Sukuk market. It closed the month of May at about a 19.75 interest rate, and that's for the 7-year instrument. So how has this paper been trading since then, in contrast to the other debt instruments such as the bond and the treasury bills?
Okay, so like you rightly mentioned, when the Sukuk was floated in May, it's closed at 19.75%, which is actually the best profit rate that we have seen on the Sukuk instrument. At that time, it was the same for the federal government bonds, and the treasury bills were trading around similar levels. But what we see in the market is money market instruments actually trending lower. The FGM bonds that are around the 2032 papers are trading around 16.9%, and treasury bills trading much lower at 15% level. So the expectation is that once the Sukuk starts trading in the market, they will actually find the levels and be trading alongside where the federal government bonds are trading. When you mentioned earlier, you mentioned the stock markets improving, seeing gains and wins, and that's because people are actually shy of the levels they are finding in the federal government bond, the money market space. So they're moving investments to where they can get higher returns, which is why the stock market seems to be booming at this level. So for the Sukuk paper, we expect it to trade a little lower than where it closed at the auction at 19.75%, reflecting whatever is happening in the other fixed income securities.
I'm sure investors are really keeping an eye on all the markets, and I know that there's this correlation between the stock market and the fixed income market as well as the Forex market. But we keep our eyes on how all these markets are performing, and of course, investors will make the right choices when they choose to put their money where their mouth is. Thank you so much for your time on the show.
Thank you very much for having us.
That was Akmayo Oputu, Chief Dealer with Lotus Bank, giving us details for the Forex market and the fixed income market at intraday, and then, of course, expectations for investors. Okay, so let's see how the Middle Eastern markets are performing. The two markets on the United Arab Emirates, the two indexes there within that region, both in the green territory. The Abu Dhabi, about 0.5%, that's the last track that we had there, and the Dubai index, much more than just a tad above 1%, 5,000, almost to the 6,000 level. And this is coming as investors are reacting to a flurry of bank earnings within the region there. But it's a different side of the picture for the Tadawul, that's for the Saudi Arabia market index there, and the Qatari Stock Exchange index at intraday trading. Both were in the red, and this is no thanks to the impacts of profit taking, where you have the bulls and the bears. That's for the interpretation of the market. So this is just a snapshot of how the markets are performing for intraday. So we fly from the Middle East and go straight up into the United States, where only the Dow Jones Industrial Average Futures was in the green, 0.05%, while the S&P and the NASDAQ both were in the red, just ahead of the opening bell, 2:30 Nigerian time. And this is coming as investors are awaiting a flurry of bank earnings reports. We've had from the Bank of America. We've also had from the likes of JP Morgan and other banks there. So the market is also anticipating the producer price index, which is one of the key inflation reports that the market keeps an eye on, and that's for the producers. Yesterday we had the consumer price index report, which came just out. That was on Tuesday. So the market has actually reacted to that, but is awaiting the PPI, which is due to be released later today by 2 o'clock, 2:30 Nigerian time, and would tell us how the impact of Donald Trump's tariff, what impact it's been having on the market. So, that's a snapshot for the markets. Asian markets were mostly also in the red.
All right, Anisia, thank you so much.
Pleasure.
Well, we're still staying in the market. Let's head to Berlin now and see what European markets or investors are doing. Chiponda Chimbelu brings us up to date on that. Hi, Chip. Good afternoon. What's going on in the market?
Mixed today. The Euro Stoxx 600 is actually flat, but it was trading lower in the morning. And Germany's blue chip index, the DAX, is up slightly at 0.4%. Now, investors are focusing on corporate earnings and trade negotiations because, of course, that August 1st deadline is looming. Now, in terms of stock news, ASML, which is, of course, the world's biggest supplier of computer chip making equipment, fell more than 7% in today's trading. And that is despite second quarter earnings beating market expectations. Now, the Dutch company has warned that it may not achieve growth next year. Now, that is, of course, also a signal to investors here in Europe of a potential deterioration for the outlook for European companies because of uncertainty caused by the ongoing threat of higher U.S. tariffs on EU goods.
And away from the market now, we hear there's a controversial budget in France. What's that about?
Well, the French government, Ini, wants to cut spending by nearly 44 billion euros, and that plan includes a new tax for the highest earners, keeping pension and welfare payments at 2025 levels, and scrapping 2 public holidays. So this is, of course, all in a bid to lower France's public deficit, because, of course, the EU's second biggest economy has one of the highest ratios of government debt to GDP in Europe, with only Greece and Italy having higher levels in the EU. Now, last year, France's government debt was actually around 113% of its GDP. That is much higher than the level that has been set by the European Union. It requires member states to maintain a maximum debt of 60% of GDP. But of course, it's not just Brussels that is concerned about the French government debt. Several rating agencies have lowered France's credit rating. At least last year they did. And while France is still has a good rating compared to like many other countries, it is quite strong, there is still concern about its ability to lower its debt levels. But the problem there is that there is very little support for the centrist government's efforts to do that because of political uncertainty in the country.
Yeah, and obviously political uncertainty will connect to the economy one way or the other.
Yes, and it is, of course, in France, Ini, because France has that minority government which always has to rely on a left-wing alliance or the far right to get anything through in parliament. Now, those two wings, of course, want very different things, so that does lead to political deadlock. And now European countries, of course, that they're being forced to spend more on defense. That also means that for France's government, it doesn't have the wiggle room to take on more debt because, of course, French sovereign borrowing costs have risen to the highest levels since 2011. So the French government's hands are tied for now. And on the other hand, you see other countries like Germany unleashing hundreds of billions in government debt for spending on defense and infrastructure over the coming decade. So that means that businesses are more likely to probably prefer investing in a country like Germany than France, which is, of course, tightening its spending. And that is perhaps why we may continue to see that the French economy may remain in stagnation.
Yeah, unfortunately that. Thank you so much, Chip, for giving us that update.
Thanks, Ini.
Let's come back to our continent here in Africa. Senegal has raised 364 billion cedis. That's about $654 million in its second public bond offering of 2025, exceeding its initial target of 300 billion francs. The West African nation's finance minister, who shared this, said it forms part of the government's broader strategy to diversify budget financing sources, deepen domestic capital markets, and manage public debt. Senegal has seen mounting concerns about its debt levels. International bonds have lost roughly a quarter of their value since revealing in September it had what analysts estimated as up to $14 billion of previously undisclosed debt. Proceeds from the bond sale will support public finance recovery, economic stimulus measures, and help optimize debt servicing. The securities are also eligible for refinancing, providing additional liquidity to the banking sector. From Senegal, we go to Kenya, where the Communications Authority of that country has issued a stern directive to financial institutions, motor vehicle dealers, both public and private entities, urging strict compliance with licensing regulations for tracking service providers. To mitigate these risks, the CEA has directed all stakeholders in the use of tracking technologies, including financial institutions, motor vehicle dealers, and both public and private entities, to engage only licensed application service providers whose licenses explicitly cover fleet management and asset tracking services. They are also required to verify the annual compliance certificate of any tracking service provider before entering into contracts or partnerships, and review all existing and planned agreements with tracking service providers to ensure full compliance with regulatory standards. We're still in Kenya, where they've officially removed visa requirements for all African nations and most Caribbean countries, and it's in a bold step that's aimed at fostering intra-African trade, tourism, and integration. The move is part of a wider continental push to enhance connectivity and ease of movement across Africa. Previously, holders of Zimbabwean passports were required to obtain an electronic travel authorization to enter Kenya. Despite being exempt from traditional visas, that requirement has now also been scrapped. Under the new policy, travelers from African countries will no longer need to fill out lengthy forms or pay any visa fees to enter Kenya, marking a significant shift towards facilitating hassle-free travel across the continent. I guess my next vacation can be in Kenya since I don't need a visa, right? Well, still in Kenya, the Capital Markets Authority has approved a raft of new collection investment schemes, sub-funds, and licensed new market intermediaries, including securities dealers and corporate trustees, in a move aimed at enhancing product diversity and increasing access to foreign and local currency-denominated investment options. The regulator granted Sanlam Investments East Africa permission to launch a new sub-fund under its existing structure. And in Ghana, the country is working on a program to hedge the price of gold export as it seeks to shield earnings that have bolstered the central bank's foreign reserve from future volatility. The governor of the central bank, Johnson Asiama, says that Ghana's gold exports increased by 76% from a year earlier to $5.2 billion in the first 4 months through April, and that underpins a widening in the trade surplus to $4.1 billion. Let's head to the crypto space now. It's been a lot of movement in there. But first, Ladi, visa-free to Kenya, good for you.
Right.
And we talked about gold and Ghana this morning. We can see them now taking some steps to try to protect what they've gotten, in the reserve through gold. And they don't want to lose that stability that they've come to have.
Exactly. You get used to it at this point, and I think the whole of Africa should get to a point where we don't need visas anymore. Let's break down all those borders.
That's
what we're aiming for at this point. All right, let's get a check on what's playing out in the market now. It sits mostly green on the screen there with Ethereum, deep green, 6.51% up. Let's look at the top headlines now. We're seeing most of it's crypto week right now in Washington, but we're seeing some of those bills there being blocked. If you look at the headlines, then we see Pump.Fun has generated over $60 million in fees for Solana. Yeah, that's one of the platforms where you launch some of these meme coins there, generating a lot of money for Solana's platform. Then we see Big One Exchange, that's lost about $27 million there. They got hacked there. We know most of these crypto exchanges, they normally get hacked and people's funds get stolen, but somehow they're able to bring back those funds. But let's bring in Gilbert Opata now. He's a team lead at Smart Investor Lodge. Great to have you, Gilbert.
Yeah, greetings, Mr. Ladi. Great to be here.
So, yes, what are the smart investors looking at in the market right now? We're still seeing there's some kind of blockage there happening with the Genius Act and other crypto bills.
Okay. In a bid by Donald Trump to make the U.S. the undisputed unquote, ahead of China and Europe, led to this the three bills, which is the Genius Act, which was meant to create rules for stablecoin clarity. I think the clarity was so important because there have always been fight for jurisdiction between the SEC and the CFTC, and then the anti-CBDC, Surveillance Act. But then the one very interesting thing happened, in Congress, because the Congress was supposed to, move on this, is the fact that even though they argued among themselves, a lot of Republicans still sided with the Democrat to block the process. For now, this is just on hold, and it is not dead because it just hit the wall. And if you notice some of the argument was that some Republicans want all of these bills to be in one page, while the Democrats, some of them are concerned about weaker consumer protection. Some of them think that there is some kind of strong anti-CBDC language and some things that this bill has been pushed to benefit Donald Trump ties with cryptocurrencies. And then, more of the Republicans also still disagreed with some kind of strict rules for banning CBDC. But when you look at the kind of argument that was made there, I think that they were just doing what they were supposed to do. And so this is procedural and not final. I think that the next phase will still have to be putting the bill together and then continue, on whether they have to assent on the bill or not. But so far, I don't think anything really messy has happened.
All right, but I'm still wondering if there's some kind of, canary in the coal mine moment right now. Is this spelling danger, going forward? Are we seeing early signals here? Because we're seeing price action. Bitcoin has left that all-time high from $123,000. Is this going back down, or are we going to retest that level?
Hello.
Okay, Gilbert, can you hear me? Did you hear my question?
Hello, I lost you for some moments.
Okay, so I'm asking if, the blockage we're seeing
No,
there.
I couldn't hear the question.
Okay, the blockage with the bills there, is this spelling early signs of danger for price action? That's for Bitcoin.
Okay, I think this have both short-term and long-term consequence. The short-term had to do with the fact that we saw 3% drawdown for BTC, and then we had crypto-related stock going down just because it failed a vote, and then that was a knee-jerk reaction that we did. So at that point, Bitcoin is still going to do well. However, on the long term, I think that is showing us the symptoms of what the future of cryptocurrency will be. It's about power, it's about control, and it's about privacy. And so I think this is why the procedures and the arguments right there in the Congress is very, very important, because it's giving us a glaring view long term on what the future of cryptocurrencies is going to look like as they are ready to play as the leader. So short term, it was just that knee-jerk reaction we had, but long term, we are looking more about power, control, and privacy.
Right. Thank you so much, Gilbert, there for breaking it down for us. We'll keep tracking those prices and Crypto Week in the U.S. Thank you.
Yeah, thanks for having me.
All right, so there you have it. Bitcoin there still flirting with all-time highs. The NGX all-share index in all-time highs. So I'm thinking maybe there's some kind of correlation between NGX, ASI, and Bitcoin. Who knows?
Adi, please keep looking for the correlation.
I'll keep looking.
Keep looking for it.
Fantastic.
Once you find it, please
I'll let you know.
All right, so that's it on the program. Thank you so much for being a part of Business Incorporated today. Tomorrow, Adi will be here at 10 a.m. and then I'll be back at 1 p.m. to give you updates from the world of business. I'm Minnie John McCall. See you tomorrow. Bye-bye.